Interesting question. I was discussing with somebody a legacy challenger bank the other day, and I think, when I look at the sector...
Is that a new part that we're putting into
Yeah,
this now, right?
Exactly. Some of these businesses have been around for a long time. And I think when you look at them, the concerns that I have around their long-term viability. You look at the struggle for profitability for a long time, and as you mentioned in the intro, interest rates have helped. But I really look at these businesses and think maybe the future is maybe necessarily a little bit gloomy.
So how do you then build confidence, acceptance? A lot of consumers looking at your business and thinking, actually, it is a viable. It can be my first bank, as opposed to it being a secondary bank that I use.
Yeah, again, look, I think that's a really interesting question. And when you look at people like Monzo in the UK or Revolut, I think there's a real question around, are people using them as their primary bank accounts? I think for me, the key thing here is product. For me, as a 20-something-year-old, when I first joined something like Revolut, it made a lot of sense. I had a thin bank account, I had a current account, and that was all I needed. I didn't need, the things that I need now. I'm 37, I have a mortgage, I'm lucky enough to have some savings. And I think for me, as we start to see some of these companies moving into providing those products, that's where we'll see some of the trust and credibility coming.
Yeah, and look, there is the basic problem. And I've looked at Monetize and Starling, and we've spoken to all the CEOs of these companies over the years, and of course Revolut, where we've spoken to the management, and I know Martin Gilbert very well from his previous incarnation as well. And the truth of the matter is that there is an inbuilt problem. And that is that the big banks are watching the whole time. Yep. So if Monetize does something interesting, or Revolut does something interesting, Barkley's, HSBC, which is, I think you're an alumni of, aren't you, as well? Yeah. All the big banks will say, yeah, that's good. Actually, that's not going to cost us a lot of money to do that. Yeah, we'll add that feature. Boom, done. So everything that these guys are absolutely brilliant innovators. But they have regulatory problems, they have capital problems, they have, as you say, interest rate problems with their debt profile and growth issues. The big banks just say, yeah, we'll have some of that. That's great. Good idea.
Absolutely. And I think if you look at the success of Chase UK in the UK that JP Morgan have had, they've had a phenomenal year. 20 months, they've scaled to 1.6 million customers, $15 billion in customer deposits, more than Monzo, it's more than Starling. I think you have to be looking at that and saying, why would I bank with a challenger when you can have the same fantastic digital experience, great customer service, backed by a balance sheet like JP Morgan's?
In terms of where it's at, though, if Karen was on set, I'm pretty sure she'd go there. And so in honour of her having her day off. Yeah, but payment systems, oh my goodness. And I think this is a fair point as well, that in the ecosystem, we look at the customer-facing banks, and they have enormous problems. I think we're probably in accord on that one as well, even though they would argue that they have a great degree more nimbleness and innovation that the big banks don't, and that may be valid. But in terms of payment systems and elsewhere down, it almost opening up the hood of the banking system, there are some stunning gains being made, aren't there?
Sure, absolutely. I mean, and you see that's where the most resilience seems to, the buoyancy in the sector seems to be. We've seen Swan in Europe raising $37 million, 30 million euros recently. You see a lot of investor interest, certainly in the investors I speak to, in payments infrastructure, things like KYC, AML, which still remains a big problem in a lot of banks. There's a lot of money to be made there.
Mm-hmm. You've just been noting regulation a little bit earlier as well, and I mean this new Basel 3.1 regulation. Does that put a spin on things in the sense that you'll have these banks sort of holding a little bit more by way of capital for themselves, which does make them, I guess, a little bit surer as an entity, but it does hamper smaller entities which may have wanted to borrow from a few of these challenger banks as well. Is there two sides of this coin here that we do need to be careful of?
Sure, and I think you see, we all had a front row to, the recent loss of banks, things like Credit Suisse, First Republic in the US, and Silicon Valley Bank here. And I think actually going back to the point around consumers, if I was looking at an early, a challenger bank, I had more than £80,000 or whatever the FCA insurance cap is. Would I be looking to put that into a smaller bank? No. And I think, to your point, I think it makes far more sense to be putting money in bigger banks. They seem to be far more resilient.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.